Are you ready for filing GSTR 9 and 9C? Because this is the high time to prepare ourselves to file GSTR 9 and 9C. And if you have a single confusion, then I have solution for you. In this short video, we'll try to cover each and everything from the GSTR 9 and 9C perspective. Okay, so be ready. Let's start our discussion on the form GSTR 9 first. If your turnover is 2 crore and more, in that case, the applicability of GSTR 9 is mandatory for you for financial year 2024-25. Now, the question is that in this form GSTR 9, we have to provide the details related to our outward supply, related to our input tax credit basically. That means while filing our monthly return, GSTR 3B or GSTR 1, we are providing the details related to our outward supply in GSTR 1. In GSTR 3B, we are providing the details related to our consolidated amount of sales and input tax credit and paying the applicable taxes. Accordingly, the amount will be paid through cash ledger or the amount will be credited into our electronic credit ledger. Basically, the same details we have to provide in a consolidated way in our form GSTR 9 due to section number 44 of CGST Act. Now, in this form, government has divided this form into certain parts. For our simplification, I can say we are supposed to divide this form into two parts. One is on account of outward supply, another is on account of input tax credit. First part, that is outward supply. Sir, in case of outward supply, there may be chances a taxpayer is making the taxable supply and another part is not taxable supply. Here, not taxable supply includes your zero rated supply, your nil rated supply, your exempted supply, and your special non-GST supply and a specific supply on which recipient is liable to make the payment of taxes. And for taxable portion, there may be chances B2B, that is registered person, B2CS, that is unregistered person. There may be chances of supply export with payment of tax, special economic zone supply with payment of tax. There may be chances of advances. In case of services, if there will be advance, then GST will be applicable on account of that advances and deemed export. And sir, also inward supply on which you are paying the taxes as a recipient due to section number 9 subsection 3. These are the parameters which is included in your outward supply, excluding your inward supply on which you are paying the tax as reverse charge mechanism. Now, sir, this is the bifurcation of my taxable supply: B2B, B2CS, export, special economic zone, advances. There may be chances some credit or debit note on account of these supplies. So we need to provide the consolidated data, credit and debit note, or any amendments thereof. The same applicability will be there in case of not taxable supply, that is zero rated, non-GST, nil rated, exempted, on which recipient is liable to make the payment of taxes. In these type of supplies, there may be chances of credit and debit notes and amendments. So basically these two parameters we have to provide in our GSTR 9 from outward perspective. Now, sir, one question is that whether I have to file my GSTR 9 return as per my books of accounts, as per my GSTR 1, as per my GSTR 3B. So first thing which you need to keep in your mind, that in your GSTR 9 return, all the data which is coming from GSTR 1 only. Now it's your responsibility to make the data as per your books of accounts, because finally your liability will be calculated based on your books of accounts only. Now question is that how we can make our data as per books of accounts. So sir, suppose your GSTR 1 and books are completely reconciling, keep it as it is, which is coming from your GSTR 9. But suppose if there is a variation and that thing you have not rectified within the timeline of section 16 subsection 4, that is 30th November, or annual return filing date, whichever is earlier, in that case you have to make the necessary adjustment in your outward supply part GSTR 9. That means if any variation which you have not reported till date and you are supposed to report in GSTR 9, then your data will be as per books of accounts. So finally, your GSTR-9 sales should be reconciled with your books of accounts. That is what is the crux of form GSTR-9. Now, second part of this form GSTR-9 is your input tax credit. Now, sir, input tax credit, as we all know that this ITC is heart of GST, because maximum number of litigations under GST is due to this input tax credit only. Now, this financial year onwards, government has provided a very special facility for all of us. Suppose any input tax credit which was related to 2023-24, I have claimed during 2024-25 within the timeline of section 16 subsection 4, then till 2023-24 I have no facility to segregate that particular ITC figure in my GSTR-9 form. But from this year onwards, government has provided 16A1. So total ITC will be auto-populated as per your GSTR-3B. You may segregate the ITC which was related to preceding financial year. So now the remaining ITC will be related to your current financial year only. Now you just need to provide the bifurcation of that current year related ITC, that from where you have get this input tax credit. So you have to provide on account of purchase, on account of reverse charge mechanism, because there may be chances as a recipient you have made the payment of taxes, so you are eligible to claim the input tax credit. So accordingly, if you have claimed, you have to show it separately. There may be chances you have imported certain goods or services, so on account of import there is applicability of reverse charge mechanism and payment of taxes. There may be chances you have received the input tax credit as an input service distributor. There may be chances you are claiming the input tax credit due to ITC 01, 02, 03. What? ITC 01 which will be applicable in case of new GST registration, ITC 02 which will be applicable in case of your merger, demerger, amalgamation, that is transfer of ITC, ITC 02A which will be applicable in a specific situation of new registration within the same state, and old GSTN is going to transfer the input tax credit to new GST registration for one time only. So there may be chances of claim of input tax credit on account of ITC 01, 02, 02A, you have to show it. And when you are showing the data of input tax credit on account of purchase and RCM, government is saying, we also wish to know that this ITC is on account of your input service or capital goods. So you have to provide the bifurcation. Now question is that suppose if it is not possible for you to provide the input service and capital goods, all the three bifurcations, in that case government has given you one option. You may provide the input and input service related ITC consolidated, and for capital goods you may provide a segregate figure. This is all about your claim of input tax credit. Now sir, there may be chances that you have to reverse some input tax credit due to rule number 37, that is non-payment to creditors within 180 days. There may be chances rule number 37A, non-payment of taxes by the supplier, 38 NBFC and banking company, rule number 39 input service distributor, rule number 42, 43 common input tax credit exempted taxable business non-business purpose, or section number 17 subsection 5, or any other reversal which you need to specify. So these reversals also you need to show, and that should also be as per your books of accounts. So here keep in your mind your GSTR-3B, whatever ITC you have claimed, you have to make it as per your books of accounts. With that, this is the complete data which you are providing, the bifurcation based on your GSTR-3B and books of accounts. Now government wants a second assurance, second confirmation. So government is asking that can you please reconcile your input tax credit with your GSTR-2B, and suppose if there will be a variation, so you have to identify that variation and provide the reasons. So government has also identified that there may be chances some input is reflected in your GSTR-2B, but you have claimed in the subsequent financial year, so you should show it. There may be chances some ITC which is available but you have not availed the same, show the figures. There may be chances you have some ITC but the same is ineligible, so ITC available but ineligible. With that, from this financial year onwards, government has provided one additional facility. Government wants the input tax credit reconciliation on account of your import. So government is saying total taxes paid on account of import, total ITC which you have claimed during the current financial year, total ITC which you have claimed during the subsequent financial year, or if any ITC which is still pending, then show it as lapse. So as we know, in case of import, we have to pay the taxes and we have to claim the input tax credit. So government is also asking the complete reconciliation. Sir, this is about my outward supply and input tax credit. The final goal of government is to check whether the proper revenue has been received or not, how the same can be identified. So for that purpose, we have a special table, that is tax payable and adjustment thereof. That means total tax liability as per your outward supply, total input tax credit which you have claimed, and if any cash payment which you have made. And after that, suppose if there is any differential liability, because the tax payable table in form GSTR-9 is completely editable. So if any differential liability is there, now question is that, sir, why there will be additional liability? There may be chances some sales which you have not reported within the timeline of section 16 subsection 4. Now you are supposed to report it in your GSTR-9, so that will create an additional liability. So you need to increase your tax payable. So when you will increase your tax payable, automatically differential liability will be created. Till 2023-24, no facility was available that the separate figure will be there regarding your tax liability. You have to take care of the point that I have declared one additional liability. But now, from financial year 2024-25 onwards, government has provided the mechanism that you may show a differential liability that will be automatically calculated based on your adjustment or tax payable table. Sir, input, output, tax payable, all done. Now there may be chances certain adjustments which was related to current financial year, that is 2024-25. There may be chances you have claimed or you have adjusted your outward supply during the subsequent financial year within the timeline of section 16 subsection 4. So government has provided you table number 10, 11, 12 and 13. Any outward supply related increase, decrease, any ITC related claim or reversal that you need to show which you have made during the subsequent financial year. And sir, this table is very special and very crucial, because many times we forgot to show the figures in this table, and due to that in future there may be chances of some litigations where tax official will say that where you have reported the ITC or the outward supply related adjustment which you have made during the subsequent financial year, how we can verify? Or there is a default in your form number GSTR-9, you have not filled the data in the mandatory fields, it will create the applicability of penalty. With that, there are some optional fields like refund related details, refund claimed during the year, sanctioned during the year, rejected during the years, demand related things, demand raised, demand paid, demand outstanding, but these are completely optional. Also, government is asking for any supply which you have received from composition supply, any deemed supply, these details you may provide. So that is also optional part. But sir, we just need to suggest our client that you should ready with these tables as well, because in future government may apply mandatory implicability of these fields. With that, the final, the crux, the conclusion, we can say we need to provide the HSN code wise outward summary which is mandatorily required, and keep in your mind the HSN code wise outward supply which you are providing, that should be reconciled with your books of accounts. There should not be a single difference. Also, HSN code wise summary input tax credit, that is not mandatory, that is optional, but we should suggest our client that you should ready your accounting software, so that in future if government will demand these things, we can easily provide the same. Now one question is that, sir, can you please suggest what are the documents which we need to take from our client for effective and smooth filing of GSTR-9? Yes, number 1, consolidated GSTR-3B, consolidated GSTR-1, audited financial statement and system generated financial statement and trial balance. Also, I suggest while filing the GSTR-9 return, you should check whether all the additional or principal place of business which has shown on GSTN common portal are as per actual existence. there is any change in HSN code, there is any change in any proprietor, partner and director. So we just need to confirm these things with our client as well. It will create some impact from our side. And also, sir, this is my form GSTR-9. Now, GSTR-9C. One suggestion from my side, when you are filing your GSTR-9 and 9C, file both these returns simultaneously. Don't file your GSTR-9 first and then after you are supposed to prepare the 9C. No. We just need to work on these two forms simultaneously. Okay. And GSTR-9C is nothing. It is just a reconciliation with your books of accounts. If your turnover crosses 5 crore or more, in that case, you have to fill this particular form or this reconciliation statement. Your GSTR-9 related outward supply will come into GSTR-9C and you have to compare it with your audited financial statement, or there may be chances of some differences. So government has identified some differences like unbilled revenue, unadjusted advances, valuation related differences. There may be chances of composition related turnover, foreign currency fluctuations, credit note related adjustments. And government has given a very special point at the end, that if any reason which is not listed above, then if there is any difference between our audited financial statement and GSTR-9 turnover, then you need to show that figure in the 5O. And when you are putting any figure in your 5O, just keep in your mind that we have to provide the reasoning. We need to provide the explanation. And whenever we are providing the reconciliation of audited financial statement and GSTR-9, we just need to keep one thing in your mind, that sir, if there will be a difference, we need to provide the reason. This is the turnover reconciliation. With that, government is also asking for the reconciliation of tax liability, because at the end, government is concerned about the tax liability. So government is saying rate wise tax liability as per your books of accounts, 5%, 12%, 18%, 28%, under forward charge, under reverse charge mechanism, compare with your tax payable part GSTR-9. Because GSTR-9 में हमने show किया and we have paid the taxes as per the tax payable portion. So compare it with your books of accounts as to ensure that the applicable taxes we have made the payment or not. With that, government is asking for the ITC reconciliation, input tax credit as per your books of accounts, and ITC as per your GSTR-9. If there will be a difference, then government has given two reasons. One, ITC related to current financial year claimed during the subsequent financial year, and ITC related to preceding financial year claimed during the current financial year. Now here is one crux. Sir, while filing the GSTR-9 return, we have already segregated the ITC in 6A1, which was related to preceding financial year claimed during the current financial year. Now again, government is asking for that particular field or that particular amount in 9C. It will create additional difference. So we need not to fear from that particular difference. Difference should be there. We just need to provide the reasoning that we have already segregated the figure in our GSTR-9. Now, as per the mandatory field, we have to provide the details again. Hence, it is creating the difference and the amount is exact the same. Then government is asking for a head-wise ITC. That is not mandatorily applicable for now. So we may skip this particular type of point. But yes, keep in your mind, if you wish to suggest to your client that, sir, you should be ready because in future government may apply these things on you. With that, if any additional liability which you wish to report in your GSTR-9C, then you have to report rate wise 5%, 12%, 18%, any liability which you have not reported during the financial year within the timeline of section 16 subsection 4 in the form GSTR-9, then you may show it in your GSTR-9C and pay the amount through DRC-03. With that, in the form GSTR-9C, you have to attach your financial statement. While filing the GSTR-9 and 9C, we just need to keep some points in our mind. We just need to collect all the documents from our client in one go. Prepare a summary chart, prepare the reconciliation of input tax credit and outward supply. Our GSTR-9 should be as per books of accounts. We just need to check the GSTN common portal from additional care perspective, like any notices which has been issued, all the registration particulars which is mentioned on the GSTN common portal are proper or not, that also we need to verify. So these are the some special points related to GSTR 9 and 9C I have shared with all of you in this short video. Sir, whatever will be your comments, whatever will be your feedback related to this particular video, I wish you should put it in the comment box, in the chat box. Also, I request, during the filing of GSTR 9 and 9C, if you face any query, any concern, the number are there, you can connect, or WhatsApp will definitely help you out. Thank you once again. Stay connected for more such updates.